Next company, Gravita India, they deliver a strong set of numbers. That explains why the stock as well has moved to the high point of the day in the last few days. It was trading at a 52-week high. Mr. Navin Prakash Sharma, the Executive Director of the company, joins us on the show. Hi, Mr. Sharma. Good morning and congratulations on a solid showing. But what's the way ahead? For the year, what kind of volume growth are you looking at? I recall in the past you told us 25% odd is what the volume growth you're looking at. And margins, we have included the other income as you've explained to us in the past. It should be included as part of the operating profit. So you're clocking around 10%. What's the outlook for the year?
Good morning. Thank you for your invitation. And we keep maintain our journey. What we have told that we will be growing with a 25% CAGR in volume terms. And we foresee that this year also will clock the same volume at the rate of 25% over previous year.
Margins? What about margins, sir?
Margin level also, the EBITDA is in 9 to 10% level, and by this H1 we have done around 10.30. So we also keep maintain the same numbers.
Same number means 9 to 10%, or you believe now you want to upscale it to more than 10%?
It will be upscale more than 10% in next financial year or for the next financial year, because there are certain areas where generating ourselves our own fuel through tire recycling or rubber recycling. So we foresee that there our cost of fuel will come down, and we can foresee that time the number about 10%, 10 to 11% or even 12%.
All right, 10 to 11% or even 12% is what you're guiding for in terms of margins with a 25% volume growth. I was looking at your products, or rather your verticals, and it seems like only lead is growing right now. Lead rather has seen a growth of 32%, whereas all the other verticals, be it aluminum, plastic, turnkey, all of them have underperformed this time around.
Yeah, particularly in case of aluminum, there was a downturn in Chinese market, and I hope this will remain for another quarter, but that will recover by the Q4 of the year.
And plastics?
Plastics also, we are in the process of getting EPR OEM tires, the new rules which has come from Ministry of Environment Forest. So we hope that once we get all these OEM approvals in plastic, the volume will start growing.
Do you think that one more quarter of pain for the ex-lead business and then it starts improving from quarter 4? Is that what you're trying to tell us?
Yes, yes. And that will recover. I suppose that data, what the China is giving the field, now they have pump up money in the industry. So we foresee that that will come up in Q4, and that should recover the whatever lag has been done in first 3 quarters.
Okay, give us an update on 2 factors. One is your net working capital days, that had moved up if I compare the first half of the year in comparison to last year. That's point number 1. So tell us what is the outlook out there in days. And also the debt number, it seems to have gone up a little bit. Obviously, you have an ambitious capex plan. But what's the outlook on both these two, updated debt number and net working capital days?
See, net working capital days is 85 days, and which will be reduced in time to come, because since we are a growing company and somewhere we have done the new investment in Togo, so we have higher working days because the production has started late, and we foresee that in time to come these 85 days will come down to 65 days over a period of, you can say, 2-year cycle, where we have more domestic scrap collection, and we are operating higher capacities from our Mundra plant, which is near to the port. And when it comes to debt, current debt is 400 CR, and its majority is working capital debt. Only 60 CR in terms it's a term loan.
All right. I just wanted to know this Vision 2027 that you've laid out for everyone, which is 25% revenue growth, 35% profitability growth. How much of that factors in your lithium-ion recycling? I mean, by when does it start contributing to your business?
Lithium-ion recycling, since the battery life is almost 7 to 8 years, and the battery availability in the market for recycling will only available by FY 26-27. So I don't think the volume terms it will add in that particular business. It should come post that only. But yes, that business will start because we are coming up with a facility at Mundra. So by the time batteries are available, we will be depending on the imported black market.
So basically this 25% revenue CAGR vision that you have for 2027 does not include the lithium recycling business, right?
That number maybe total volumes, maybe 2 to 3%.
Okay, so smaller part, only 2 to 3%. And you know, the new verticals, I recall in the past, new verticals like lithium, you said maybe you'll put 250, 300 crores, and the turnover could be close to around 2,000 crores approximately, right?
Yeah, new verticals, we have paper and steel also. We are coming up in African and other South Central American territory where we will have new vertical from paper and steel also.
Okay, and the margins will be similar, 10% odd?
Yeah, that will similar on that number.
Okay, what about exports as a percentage of revenues? How much is it, and any new verticals you're looking at?
As of now, export is 50% is export, 50% is domestic. We maintain the same ratio. It used to be higher that time, but since Indian demand is more, so now this ratio is 50% in favor of India, because a lot of EPR is being also done for the for battery recycling for battery manufacturers. So that material goes for the domestic sales.
With the stock at 52-week high, any fundraising plans?
As of now, no.
But is there a probability to think about it? Some equity?
No. Whatever capex we have planned, that will be from internal accruals. As we mentioned that by 2027, we'll be doing around 600 crore of capex.
We'll take your word for it then. Mr. Sharma, thanks so much for joining in. The stock has run up a great deal. So now justification of these numbers will be key, but we've taken all your points on board. For the time being, slip into a short break, come back, continue to focus on markets and stocks in action.